The Sharia way of banking has been seen at $1.2 trillion estimated and is rapidly growing in the finance industry. Islamic finance is said to add to a country's annual GDP growth, cut projected deficits and open tens of thousands of job opportunities for the unemployed. Now, here to give us a deeper look into the world of Islamic finance, we have Mohammed Kaka, who is General Manager at Baraka, and Yusuf Dukander, Project Director at the South African Institute of Chartered Accountants, also known as SAICA. Let's start with you, Mohammed, just to set the scene. This is obviously a field that you guys you live and breathe it every day, but people who are not of it and haven't read about it perhaps set the scene globally for Islamic banking and how it works and the state of play, and then in South Africa.
Islamic banking started off in the 60s. It was pioneered by Egypt, and it then moved across a very stagnant period through to the 80s when interest started taking effect on Sharia banking. What had happened was Malaysia and Bahrain came to the fore, and we've seen that grow and steadily grow, and the robustness that Islamic finance has shown through the global financial crisis has now firmly placed the spotlight on Islamic financing. Locally, in 1989, Baraka Bank was the first Islamic bank to get a license. We were followed by Islamic Bank in 1990, and we progressed also on a very stagnant basis till 2005, when other commercial banks opened up Islamic windows. That created an impetus for Islamic financing in South Africa, and we've seen the industry growing by approximately 15 to 20% per annum.
Now, as I understand it, to put it at its simplest, you're not allowed to charge interest. That's the prohibition. Does that tie up with why it was more robust during the financial crisis?
There's 6 principles. The first principle is interest. There are 2 other principles that assisted in the robustness of it. Uncertainty is not allowed in Islamic financing, so there's no speculative business that you can do. And asset-backed. Any type of Islamic finance transaction has to be asset-backed for it to be Sharia compliant. And those 3 aspects together gave it its robustness across the global financial crisis. So we stayed away from your subprime industry. You stayed away from
I was going to say these pieces of paper put together like old racecourse tickets that are worth nothing. You didn't go there.
We can't go there. It's the core of our banking system that looks at it and says, that's speculative, you have to stay away from it.
And let's look at the state of play in South Africa, because we've got a population, 2% of the local population here in South Africa is Muslim. So is the demand for Islamic banking coming from that population or outside of the Muslim population in South Africa?
Well, currently, if you look at Islamic finance, it's very much in its infancy in South Africa. Pretty much what is driving it is obviously the fact that it weathered and it also grew during the global financial crisis. As we see it, there's also a demand and a lot of pressure being put on the International Accounting Standards Board to look into it, as it obviously has displayed and demonstrated that it is credible and it has that it has financial stability. So it's relatively new. The demand, I would say, currently is predominantly from the Muslim community. However, with the initiative that SAICA has now introduced with Ernst & Young, we are hoping to introduce it and to create a broader spectrum of participation from our members and as well as the general public.
So tell us about that initiative and what it means for Islamic banking, because of course it means changes to regulation, it means changes to the tax law. How does that help to fuel growth in Islamic banking?
Precisely. The initiative is basically initially in the initial stages, it's more about creating that education and awareness around Islamic banking, the fundamental principles from the conventional finance. As we go a bit more deeper and we mature into the process, we are looking at working in consultation with the National Treasury as well as the South African Reserve Bank in terms of changing other pieces of legislation. So there have been significant milestones. If you look at the tax provisions are now in the Income Tax Act. There's been developments with Regulation 28, which will talk to the global connectivity, South Africa playing on level playing fields. There is also, which is in the consultation process, there is also some planning that is taking place with the National Treasury, whereby they're looking at the issuing of sukuks. And then we also need to go into various other pieces of legislation, such as the Banks Act, the insurance pieces of legislation. If South Africa wants to play on a global stage, we really need to allow legislation and regulation to allow that.
Our financial services sector generally is regarded as very advanced, very sophisticated, good systems, among the top few in the world. JSE already has a Sharia share index, so you can feel comfortable about investing in those shares.
Sure.
What about the fees? Where's the catch here? Because it sounds very safe, and you've got asset-backed and so on, and it meets the no interest thing. Is there a cost somewhere which Islamic people who are banking through the system have to pay, which other people don't?
I don't believe there is a cost. In fact, Islamic banking,
Specifically in fees?
yeah, I mean, I don't believe. I think Islamic banking, plays on par with traditional finance. When we look at also some of the, costing, the core of Islamic banking is not out there to create exorbitant, costs. But I think my colleague here, Mohammed, would be able to come in.
I can see you've got something to say. Tell us about how your cost compared to the likes of, say, FNB's Islamic finance options, and we know ABSA also plays in the space.
Okay, Islamic banking is firstly about ethical-based banking. It creates a social responsibility to it. And those are big words to use with banks. And typically what happens is we find that on a cost structure, we're very much driven to what the market does. So if a client looks at financing an asset and they were comparing conventional interest rates, they'd be very much similar profit rates that we charge on our particular transaction. What's very interesting to note is that fees on its own are governed very strictly on the Sharia principles, and therefore certain accepted fees in the banking industry, such as raising fees for issuance of guarantees in those things fall outside the ambit of Sharia, and we then forced not to charge those type of fees and actually give that social responsibility through to our clients. So you find that there is no real catch. Clients get on par rates in terms of what they would pay at a conventional basis, but there's more clarity and there's more certainty in this transaction. No changes when interest rates move, no hidden costs, monthly fees that are charged into the transaction. It's all upfront, it's all known to the clients.
So life less interesting watching programs like this with all the indicators and up and down with interest rates. You don't have to worry about that. Looking at the amount of money that could come into South Africa from other countries, again, if we are pretty advanced in this, there may be Muslims in other countries who say, well, we don't have a very good system here, let's consider South Africa.
I think there's two aspects to it. One is that Islamic finance is not only designed to the Muslim consumer base. It's broad-based. It's open to everybody that's looking for an alternative to the conventional.
So if you had a taste for that kind of investment, solid, no movements, not interest rate vulnerable, that could be good for you.
And then you've got an added aspect to it that with the Gulf and the strong the wealth that resides in the Gulf, anybody that's looking for raising of finance, when you look at the conventional sphere, you're looking at a smaller scale, and the minute you go into the Sharia side, you get that conventional sphere as well as the Sharia guys that are open to it.
Let's talk about the government's plan then to issue Sukuk bonds and what that means, Sukuk bonds rather, and what that means for South Africa and the type of investor that we're going to get, being able to put money into South Africa, flows into South Africa. Just give us an idea of the type of demand that we have from the Islamic community.
Well, again, the demand flows from two parts. Being an Islamic bank in South Africa, we're required, as my colleague mentioned, to comply with Regulation 28. And there's an appetite immediately from the bank itself to say we can now invest in Sharia-compliant instruments which meet the requirements for Regulation 28. Then you've got the international flavor to it, and the government is able to then attract funds from the Gulf areas and from other Islamic countries, North Africa as well. And that brings a great opportunity. We all know the infrastructure spend is big, and this opens up a big pool of financing.
I would think your governance has to be spick and span, because one thinks of the Muslim Judicial Council with the food issues, where if food is not halal, and your market, if it's Islamic, not the others who might be interested, they have to be absolutely sure that everything is above board and you are observing the Sharia law.
Precisely. With Islamic finance, you've got a different set of standards that looks at governance, transparency, And in today's world, all of that is very pivotal for companies to remain, sustainable, as well as to prosper into the future. And if I can, just add on, it is about those elements of uncertainty, social justice, governance, transparency. There's a lot more disclosure that makes Islamic finance a great potential for South Africa and the rest of the continent.
And that brings me to my question around Africa. What are your aspirations in terms of growing outside of South Africa's borders? Because we know Baraka Bank is, of course, an international bank. We know the likes of Standard Bank has got a Nigerian Islamic banking presence right now. They've opened up in Tanzania. So how much growth is there for you as a bank right now in Africa?
I think the growth is tremendous. Our group continues to look at expanding in Africa. We have representation in Africa, we in Egypt, we in Tunisia, we in...
but in Southern Africa?
I think the idea is then to move forward into the Southern Africa, Sub-Saharan African aspects. A big challenge for us is getting regulations that will meet and facilitate Islamic finance. So it's finding that parity. Looking at the market that is available, and then also finding a suitable market that can look and bring it to it.
I wanted to ask also, as we move towards the end of this chat, do you need big investors? Do you have big investors? Because perhaps you need that seed capital to get you going.
Being a bank in South Africa, we are driven by the normal regulations, and that would possibly be the challenge for a smaller bank. We're quite small in terms of the local industry. We're not even 0.1% of the industry. But for Islamic banking to prosper, you need that seeded capital. The good news is that capital is there, the interest is there. A lot of people are looking at it. We had recently a rights issue, and people came to us and said, we want more shares, give us more shares. But we've got to limit our growth in terms of what we can do. So there is very much an interest in it.
We'll have to end it there. That's a fascinating story of Sharia-compliant banking in South Africa and its potential to attract capital from other countries.